Hello, welcome to JS Services Strategy Review. Today we're going to take a look at a bull trend, specifically a bull trend with the R level outside the critical range, below the downside pivot. We're going to use sugar as our example. Bull trend is a market that's making higher move highs, higher move lows. That's the definition of a bull trend. Structurally, the R level is below the market, so that defines that lower trough of the higher move lows. So as long as the market is trading above here, the bull trend is true. One thing that's interesting about this market, the MC value is at a 9. This is at the upper edge of the bull trend. And we can see that here where the market's pressing into potentially the extreme. So you have this market that's in a bull trend that's approaching the extreme. This is in alignment with having sentiment far below the market, so the energy is down here, and as we come into this upper pivot area, we're going to be pressing into the upper extreme. So again, we're just more color, more awareness to what the true state of this bull trend condition is. Our strategy themes are to buy breaks into this sentiment bias level and look for an exhaustive signals potentially off of our downside pivot, anticipating the trend to resume. This is where the buying energy is, and this is the key tell of this state, is the real buyers are down here. So as the market's breaking out to this level, there's no buy signals up here because the energy is so far away from the market. So as the market's moving outside the critical range, we can anticipate potentially an exhaustive signal at these levels and a corrective move back down to sentiment. So taking a look at the sugar on the early opening, we have the market breaking into the directional area. This is in line with a bull trend state. It's not an optimal strategy, but it is a valid opportunity to fade momentum off the directional, because any time in a trend state that the market gets above the directional, it should maintain that structure. It should not go below the DIR metric. This is an important fact. Just as we watch price action within the market structure, we're looking to watch the market hold market structure. So as it climbs this price map ladder, it should continue to hold each rung of that ladder as it moves higher. And that's the tell of this market performing like a bull trend and paying out a full APMD to the upside pivot. This is in line with the optimal strategy theme. As long as the market is performing like a bull trend, we should anticipate it to do so. We can see the market working positive price structure, higher lows. Moving through the metrics, here's our variance and our alert distance. And it's nice when we see confluence with our price and market metrics. We are aware that the bull trend is a little extended, and we are at the top of the critical range and pressing the upper extreme. So we want to tighten up on our expectations and anticipate a potential exhaustive reversal. And here we get a violent corrective move, breaking the structure of this positive momentum. So here we're getting a break in market structure, and then we're getting a confirmed break in price structure. At this point, this positive momentum has been broken. If this market was going to scale higher, it should maintain this aggressive positive structure. We didn't get a reversal. The market did not breach our variance or our alert distance, but we definitely had an exhaustive corrective signal. But at this point, we do get a confirmation of a breakout, and we have our SELL DIR breakout strategy that's coming into play. It's violated our lower metric. We've taken out the session lows. So now we're definitely confirming that the bull trend is in jeopardy, and we are definitely in a hedge strategy theme. So we're looking to sell the market. We can start selling anywhere in this alert distance, and we can use our market metrics for our stops. And here we have a price point at 62 that we'd want to respect as well, because we're going to look for it. Now we're going to be watching this negative momentum, and this price point is important. It is what it is, but you want to look for, ideally you're looking for the alignment and that's when it gives you, better definition for your risk. Our trade vision for a sell DIR breakout is 2 APMDs, so there's 1, 2. What's important to understand is this theme has been broken. Anytime you're in a bull trend, as the market's climbing the ladder, it climbed the ladder here, it climbed the ladder here. Here you're starting to break structure, and here you confirm a break in structure, and now you're getting a confirmation that we are in a hedge strategy theme. So we are in a corrective transition. This bull trend is in transition. We have a strategy that's targeting the R level, but our buy, our fade may come into play, but it's definitely not something that we're looking to step in front of, because we're following this hedge theme. We're locking into this negative momentum. Structure's been broken, market is in transition. And here the market attains our second target very quickly. This is absolutely the proverbial falling knife. So we're going to continue to watch price structure and look at where's the price structure aligning with the market structure. So here on a very aggressive trail stop management, as the market's pushing into the R level, we can see the market has a little bit of price structure here on the top of this metric. And if this market's going to stay really hard pressed, it'll maintain a trade below this metric. If we get a violation here, it doesn't mean that this negative momentum is broken. It does mean we could see a pullback up into this price structure. And a violation through the downside pivot would confirm that this big aggressive selling is over. Here you can see how the market held that metric, and that these opportunities happen for being more aggressive, being able to come in here and put some leverage on, knowing that my risk is here, for the market to keep this really aggressive momentum, and then you have a little bit of an event. Looking for that alignment, those things do come into play. And what's happened now is we've had a really big confirmation that things have really changed here. This bull trend was in play, we got it extended, we shifted into a hedge theme, and now we're trading below here. So we're definitely in more of an event type of a situation. And now this top of this reversal level, this 16, 17 area, is going to be a key pivotal price point, and we have that confluence with our market metric. We can see here the market comes back and retests our sentiment area. So this is a rotational area. It's very pivotal, and we get that test of that area. We know what our risk is, have our price structure building off these lows. We get a break here, and we get confirmation, and the market pays out another full APMD. Keeping it simple and cluing into the facts, fact is the market's in a bull trend. It's holding the directional. It's working positive price structure. Fact is the market's approaching the upper extreme, the top of the critical range. Fact is the real buying energy is below the market. Fact is we get an exhaustive signal, and the fact is we get a confirmation break in market structure, engaging a sell DIR breakout strategy, which pays out quickly to full average price map distances. Fact is, market held very aggressive negative structure. We had some good price confluence at the top of our R level metric. At this point, we have high confidence that the market is definitely in a transitional event. The R level is going to be key. Is the market going to continue to stay aggressively offered, or are we going to bounce back into more of a digestion for the rest of the session? The market comes back into the figure. We have our metric to define our risk, sticking with the hedge theme, and the market pays out another full APMD. For more information, please contact us at info@jsservices.com and request a demo. Look forward to working with you.